Good morning, students, and welcome you all again in the second lecture of Ind AS 38. Students, today we will complete Ind AS 38 intangible assets. In the last lecture, we started with the definition of intangible asset, what is meant by intangible asset, and we have understood that intangible asset is a what is intangible asset? It's a identifiable, non-monetary asset. Intangible asset is an identifiable, non-monetary asset without having physical substance, right? Then we discussed identifiable means either this has to be separable or it has to be arises from legal or contractual rights. Okay. For example, if you have purchased a software, okay, so you have purchased a software, you have paid for that, you have got a legal right to use that software, right? Even though if this software is not separable, you cannot sold out that software, still it will be capitalized as an intangible asset. Why? Because there is a legal right to use that software and it is giving you future economic benefit. Okay. So either it has to be separable or it has to be arises from legal or contractual right. Then it will meet the criteria of identifiable and it will meet the one leg of definition of intangible asset. Then we have read non-monetary asset. What is meant by non-monetary asset? An asset which is not monetary is a non-monetary, right? An asset which is not monetary is a non-monetary, correct? So what is a monetary asset? Monetary asset are those assets where the right to receive a fixed unit of cash or fixed unit of currency is there. It is known as a monetary asset. So whatever asset is not monetary, it is known as a non-monetary. For example, inventory is a non-monetary asset, whereas trade receivable is a monetary asset, because once you sold inventory on a credit basis, there will be a trade receivable and there you have a right to receive cash. Okay. Then we discussed about the third leg, which is without having physical substance. Means you cannot see that asset. You cannot touch that asset. Okay. For example, furniture, laptop. I have my palm on the laptop because this laptop is a physical asset. This has a physical existence. I have mobile in my hand, right? This is a physical asset. This has a physical substance. Okay. But intangible asset does not have a physical existence. If these three conditions, three leg will meet, it will meet the definition of intangible asset. Friends, while discussing without physical existence, we discussed the substance and significance is very important. For example, robot. While you can see robot, you can touch robot, you can handshake with the robot, but robot is an intangible asset, not a tangible asset. Why? Because the knowledge embodied in the robot is more significant than the skeleton. Okay. So hence the value of that robot is more depends on that artificial intelligence. The significant component is artificial intelligence inbuilt in the robot, the program inbuilt in the robot, and hence what is more significant? The artificial intelligence, the program, the knowledge is more important, and hence it is an intangible asset. Second, you are getting a software on a pen drive. The pen drive costs you 300 rupees, small pen drive, but it is a physical asset, right? So should we recognize pen drive as a PPE, or should we recognize that pen drive, the program inbuilt in that program, as an intangible asset, in that pen drive as an intangible asset? Program is critical. Program is important. You are paying 1 lakh rupees, 50,000 rupees, 10,000 rupees for that pen drive. Are you paying for the pen drive? Answer is no. You are paying for the program. Okay. So I believe my voice is clear to everyone. Ashok ji, whether my voice is clear? Okay. So few students have confirmed that the voice is clear. So if anyone who is finding any lag in the voice, my request is to please log out and join again. Okay. Yes. Second example could be your computer, laptop, and operating software. The operating software cannot work without computer and laptop, right? When you buy a computer and laptop, so there is a operating software inbuilt into that. So can we recognize that entire computer, laptop as a PP or as an intangible asset, or I need to split between the tangible and intangible? Answer is no. Since this operating software is an integral part of the hardware, integral part of the computer and laptop, and the significant component is the physical asset, which is PPE, and hence the entire computer and laptop has to be capitalized as a PPE. Okay, it is not required to be splitted. So students, we discussed this part in detail with the help of few examples and illustration from ICAI study material. Then students, we have discussed that when you have to recognize an intangible resource as an intangible asset, there are three criteria. Criteria number one, future economic benefits should be probable. Criteria number two, cost can be measured reliably. And the most important, it has to meet the definition of intangible asset, right? So when you can say that you have a future economic benefit, future economic benefit comes with the control, and control comes with the power, right? Which power? Power to access the benefits by using that intangible asset, and power to stop others from using those economic benefits, right? For example, patent, trademark, copyright. Okay. So why people are getting their ideas patented? So that the others cannot copy. If other will copy, they will be able to file the suit against them. They will able to fight for the compensation against them. So that is what they want to use, the power of this trademark, patent, copyright as an intangible asset. Friends, then we discussed when intangible asset, once we decided that yes, it has to be recognized. The first pillar of accounting, you remember how many pillars of accounting are there? There are 4 pillars of accounting: recognition, measurement, presentation, disclosure. So once it has been recognized, now the time has come to measure. At what value? It has to be measured at cost. You're right, Anu, it is RMPD, recognition, measurement, presentation, disclosure. So then we have to recognize it as cost. Sir, what is included in the cost? Cost includes your purchase price plus import duties plus non-refundable taxes minus trade discount and rebates plus directly attributable cost. Sir, what is meant by directly attributable cost? Directly attributable means cost means a cost which is attributed directly to the acquisition of the intangible asset, right? Means this cost would not have been incurred if the intangible asset would not have been acquired. Okay, so this is meant by directly attributable cost. Friends, then we discussed intangible asset can be acquired by various mode. For example, I went to the market and I purchased a software, Tally software. So this is known as a separate acquisition. This is known as a separate acquisition. Okay, so we discussed that in case of a separate acquisition, the asset has to be measured at cost. Cost includes, we have discussed already, right? What is not included in cost, we have discussed already. Then we discussed the concept of deferred payment credit, when the entity is buying an intangible asset and the entity is paying in delay. Means the entity is not paying within normal credit terms. The entity has an extended credit term. In that case, just copy paste from Ind AS 16. The standard says that the intangible asset has to be recognized, has to be measured at normal cash price equivalent. It has to be measured at cash price equivalent. If somebody who wants to pay upfront, what he is required to pay. So that is the price, that is the cost of the intangible asset. Sir, but we have paid extra. For example, we have paid 1,20,000 for buying an intangible asset. Why? Because we are paying 1 year in delay. So we have enjoyed a credit term of 1 year. In that case, if I would go to the market and purchase the intangible asset and pay upfront, it costed me 1 lakh rupees. So friends, 1 lakh rupees, the cost of intangible asset, 20,000 rupee is the financing cost, interest expense for me. Okay. Then friends, we discussed the intangible asset acquisition due to business combination, right? So friends, when you acquire a company, normally why somebody will acquire another company? Why somebody will acquire another company? The fundamental reason is probably he wants to enter into that market. Probably he wants to enjoy the contract in that company. Probably he wants to enjoy some benefits from acquisition of that company. So he foresees some future economic benefit. So friends, whenever a company buys another company and company foresee some synergies, future economic benefit, and that acquirer is paying some premium, you need to identify why acquirer is paying that premium. if that premium is on account of some intangible asset, for example, customer list, for example, brand name, right? So you have to capitalize those intangible asset if you have paid a price for them. I mean to say, if it is acquired in business combination. Okay, sir, if we cannot identify any intangible asset due to that acquisition, in that case, the entire amount, the balance amount has to go to the goodwill. Okay, friends, we have done an illustration on every cases, correct? Then friends, we discuss the concept of exchange of assets. In exchange of assets, we discuss that if there is a commercial substance, in that case, the asset acquired has to be measured at fair value. Which fair value? It has to be measured at fair value of the asset surrendered. This is what you are paying as a consideration. Okay, sir, if the fair value of the asset surrender, asset given up is not there, then you need to check whether the fair value of asset acquired is there. If it is there, please use that fair value to measure the value, to measure the cost of asset acquired. Sir, both the fair values are not given. In that case, you can use the WDV of the asset surrender as a cost of the asset acquired. Friends, you remember on my Excel file, I have given you 4 scenarios. You remember in the last class, in the Excel file, I have given you 4 scenarios for that. So friends, with this 10 minutes, I have summarized, I have repeated, revised the first session. Okay, right? So quickly, friends, I'll go to the ICAI study material and let's discuss illustration number 6 on exchange of assets quickly. Then I'll jump on to the next concept. So let me take you on the illustration number 6 from ICAI study material. I believe this ICAI study material is visible to everyone. And before that, let me call out who all have joined. I can see a lot of students have joined. So good morning, Avrikesh, Anila, Anu, Tushar, Karthik, Mamta, Monica, Nisha, Ginny, Pooja, Prachi, Shilpa ji, Stephen. Good morning, Usha. Few students have joined on the portal as well. So let me call out their name. So good morning, Khushi. Good morning, everyone. So students, I believe you found this revision impactful and useful. Yes? Great. Okay. So let's discuss this exchange of asset illustration. Sun Limited acquired a software from Earth Limited in exchange for a telecommunication license. So what is acquisition? So which asset is getting acquired? Which asset is getting purchased? Sun Limited acquired a software. Sun Limited is purchasing, buying a software in exchange for a telecom license. And Sun Limited is paying through telecom license. Sun Limited is acquiring software and paying through telecommunication license. The telecommunication license is carried at rupees 5 lakh in the books of Sun Limited. It means the WDV, the carrying value of telecom license is 5 lakh rupees in the books of the purchaser, in the books of Sun Limited. The software is carried at rupees 10,000 in the books of Earth Limited, which is not the fair value. Okay. And the same software which this Sun Limited is acquiring, it is standing at rupees 10,000 in the books of the Earth Limited, the other party. Okay. Past journal entries in the following situations in the books of Sun Limited and in the books of Earth Limited. First of all, whenever this kind of question will come, like this question includes 2 parties, purchaser and the seller. Number 2, both the parties have some intangible asset. Number 3, both the parties have the value WDV of the intangible asset in their respective books of accounts. And the question demands to pass the journal entries in the books of both the parties, in the books of the seller, purchaser. So if I talk about this particular question, Sun Limited is a purchaser of a software and Sun Limited is a seller of a telecom license. Can I say that? Sun Limited is giving telecom license and buying software. Likewise, Earth Limited is a buyer of telecom license and seller of software in this particular transaction. Okay. So whenever this kind of question will come, first you need to think about one company perspective. Just think about only Sun Limited. Otherwise, you will get confused. Okay. Solve the question step by step. We will only be talking about Sun Limited right now. Okay. Okay. So friends, what Sun Limited is purchasing? Software. What Sun Limited is surrendering? Telecom license. What is the carrying value of the telecom license in the books of Sun Limited? 5 lakh rupees. Okay. Forget about Earth Limited. Situation number 1. Question number 1. Fair value of the software is 5,20,000. Fair value of the asset acquired is 5,20,000. I am only talking about from the perspective of Sun Limited, what accounting entry Sun Limited will pass. And fair value of telecom license is 5 lakh. So in the first case, the fair value of asset acquired is given and the fair value of asset given up is given. Which fair value we need to take to record the transaction in the books of Sun Limited? Anu is saying recognize at 5 lakh rupees. Anila is saying recognize at 5 lakh rupees because Anila has also given the reason, because that is the fair value of asset given. Okay, fair value of asset given. But Abracase is saying 5,20,000. I don't know why. Abracase.
My mistake.
Even before couple of minutes, I have told. Okay, okay, no problem. No problem. So friends, in this case, the fair value of asset acquired and asset given, both are given. So in this case, you have to consider fair value of asset given. What is that? 5 lakh rupees. What is the accounting entry? Software account debit 5 lakh rupees to what? To telecom license. To telecom license. Okay. So the carrying value of telecom license is also 5 lakh in this case. So in this case, in this transaction, there is no profit, no loss. So software account debit 5 lakh to telecom license 5 lakh. Whether all of you agrees with me? Whether all of you agree with me? Yes. Okay. Situation number 2. Situation number 2. Fair value of software is not measurable. Fair value of asset acquired is not measurable. However, the similar telecom license is transacted by another company at 4,90,000. Matlab, fair value of asset given up is there. Right? Because the similar telecom license is transacted by some other company at 4,90,000. It means the market price is there. So fair value of asset acquired is not given. So how does it matter? Our first priority is always fair value of asset given. So what is the accounting entry? So of course, software account debit to telecom license. But at what value? I will debit software at 4,90,000. So software account debit 4,90,000 to telecom license. I need to credit telecom license by what value? The value which is there in the books of accounts, which is 5 lakh to 5 lakh. But I have debited 4,90,000 as a software. So 10,000 will be loss on exchange debit which will go to the P&L. Okay. Third, neither fair value of software nor telecom license could be reliably measured. Fair value of asset acquired, asset given up, nothing is measurable. Not to worry. You have the WDV, software account debit to telecom license 5 lakh. Recorded the WDV of the asset given up. It is there in your books of accounts. Correct? Correct? Friends, now you need to solve this question from the perspective of Earth Limited. What Earth Limited is acquiring? Telecom license. What Earth Limited is surrendering? What Earth Limited is surrendering? Software. What is the fair value of the software? What is the WDV of the software in the books of Earth Limited? 10,000. It is given in the question. 10,000. Right? So friends, in the first situation, think from the perspective of Earth Limited. Now you are not the sun, you are the earth. Jameen pe aa jao. Okay. So come to the ground. You are earth. Earth Limited is acquiring telecom license debit. Earth Limited is surrendering software to software. Okay. Situation number 1, fair value of software is 5,20,000, means fair value of asset given up. Earth is giving up software. Fair value of asset given up is 520 and fair value of asset acquired is 5 lakh. Which fair value will be used in the books of Earth Limited to measure the value of telecom license? 520 or 5? Yes, it has to be 520. So entity, what is the accounting entry? Telecom license account debit 5,20,000 to software at which value? Of course, the asset given up has to be credited at the WDV always. To software 10,000 and to profit on exchange 5,10,000. Second, fair value of asset given up is not measurable. In this case, from the Earth Limited perspective, this software is the asset which is giving up, right? So, but the fair value of asset acquired is given. So no problem, then go for asset acquired. Telecom license account debit 490, to software 10,000, to profit on exchange 4,80,000. The fair value of both the assets are not measurable. In that case, you need to go with the WDV of the asset given up, which is 10,000. So telecom license account debit to software 10,000. I believe, I hope, I assume you guys are well versed with the concept of exchange of assets. I have given you one scenario which includes all the scenarios in the last class. I made the revision and also covered this ICAI question. Okay. Great. Friends, now let's go to the next part. So we have covered illustration number 6 as well. So friends, let's go to the next mode. Acquired by way of government grant, intangible asset. So many times, the government to promote the business in the rural areas, what government do? So normally they say that please install your plant in the remote area. Okay. We will give you a lot of benefits. Lot of benefits in the form of, for example, we understand that if Mr. Ambani is installing their plant in a remote area, then of course Mr. Ambani and Ambani family or the senior executives will visit that plant. So how will they visit? They use the helicopters, but the helicopter need a space to land. So government is saying that, okay, no problem. We are giving you airport and we are giving you the space for the landing of your helicopters. My dear friends, these landing has some charges, right? So the government is giving the landing rights, okay, which has a cost. But government is saying that not to worry, we will give you airport landing right free of cost. Or we will give you import licenses, quotas, right to receive, right to access other restrictive resources. We will give you these intangible assets free of cost or at a concessional price. Okay. Friends, if a government is giving some intangible asset at free of cost or at some concessional price, then of course the acquiring entity is getting some future economic benefit. They are getting some intangible asset. So they have to record that intangible assets, right? But the question is, if intangible asset is received free of cost, then what will be the cost of the intangible asset? So friends, standard has given you two options, right? There is a Ind AS 20 which deals with the accounting for government grants. Ind AS 20 deals with the accounting for government grants. This standard has given you two options. Option number 1, record the intangible asset at fair value. Record the intangible asset at fair value. Sir, let's say the government has given the airport landing right at free of cost. And the cost is, the fair value of the airport landing right is 5 lakh rupees. If somebody else need to purchase that airport landing right, it will cost him 5 lakh rupees. So airport landing right intangible asset account debit 5 lakh rupees. But what I should credit? What I should credit? Because I haven't paid any consideration. So friends, standard says that intangible asset and grant both need to be recognized at fair value. So in that case, airport lending right intangible asset account debit 5 lakh to deferred government grant 5 lakh rupees. Okay. So there is an asset, there is a liability. Now what happens? For example, the government has given this airport lending right for a period of 5 years. Okay. So in that case, this asset, intangible asset, has to be amortized over a period of 5 years, and 1 lakh rupee expense needs to flow to your P&L as an expense, depreciation, amortization. There is a liability also, 5 lakh rupees. This liability also needs to be amortized and transferred to other income. Okay. So liability account debit to other income, liability account debit to other income. Okay. This has to be transferred to the other income. Correct? Clear? So every year there is 1 lakh rupees of income, 1 lakh rupee of expense. This is what the accounting entry has to be there. The second option, the asset has to be recognized at nominal value plus any expenditure which is directly attributable to preparing the asset for its intended use. For example, the government has told that we are giving you airport lending right free of cost, but you need to pay a small amount of 50,000 rupees as a registration charges. So what is the nominal amount plus any expenditure? It is 50,000 rupees. Okay. So asset has to be debited. Intangible asset, airport lending right, intangible asset debit 20,000 rupees, 50,000 rupees to cash 50,000 rupees. Okay. Or government has given intangible asset free of cost, but there is some, and there is no expenditure also. There is no expenditure. So in that case, normally, just for the purpose of identification, company used to capitalize this intangible asset at 1 rupee or let's say 100 rupee. Intangible asset account debit to other income. Simple, 1 rupee. Correct? So friends, there are two options. Option number 1, recognize intangible asset and grant at fair value. Option number 2, recognize intangible asset at nominal value plus any expenditure if it has been incurred. Correct? Friends, let me take you to the Excel file and explain this concept with the help of again one more example, and then I'll move to the next concept. Okay. So intangible asset acquired, intangible asset acquired by way of government grant, acquired by way of government grant. Acquired by way of government grant, right? So students, I hope my Excel file is visible to everyone. Correct? So this intangible asset acquired by government grant, okay, it has to be either free of cost or at a concessional price. Option number 1. It has to be either at free of cost or at a concessional price. Option number 1. Recognize both government grant and intangible asset at fair value. Okay. And what is the example? For example, the government has provided free mining rights to the company for 5 years. The fair value of such right is 5 lakh rupees. What is the accounting entry? Mining right intangible asset account debit to deferred government grant. Okay. At the time of acquiring rights. So what is the accounting entry? This is the accounting entry 5 lakh. And what is the asset? Asset is 5 lakh and liability is also 5 lakh. Okay. You can see the balance sheet position is neutral. Asset is 5 lakh, liability is 5 lakh. The balance sheet position is neutral. Okay. It is neutral. What is the next entry? This asset will be depreciated. Amortization account debit every year 1 lakh rupees to mining rights. Okay. This is how this asset will be depreciated over a period of 5 years. Okay. Then what is the accounting entry for reducing the liability? Deferred government grant to other income. Deferred government grant to other income. Now what is your income? Every year income is 1 lakh rupees. What is your expense? Every year there is an amortization of 1 lakh rupees. So your P&L will also be neutral. Your P&L will also be neutral. So this is option number 1. Option number 1, recognize both government grant and intangible asset at fair value. Option number 2, recognize intangible asset at nominal cost plus directly attributable cost. Nominal cost plus directly attributable cost. Okay. In that case, example, the government has given free mining right to the company, but will charge rupees 1 lakh for its registration. Rupees 1 lakh for its registration. Okay. In that case, what is the accounting entry? Mining right to bank account, 1 lakh rupee, simple. Mining right to bank account, 1 lakh rupee, right? Sir, what happen if there is no registration charges? Assume there is no registration charges, right? In that case, what is the accounting entry? Accounting entry will be mining right. Mining right तो डेबिट होगा किस वैल्यू से? माइनिंग राइट डेबिट 1 रुपी टू अदर इनकम 1 रुपी. 1 rupee. Abrikesh, do you have any question?
Sir, I had, but this Excel file has explained, sir.
Sorry.
Just a minute, sir.
Okay, let's go to the next concept.
Sir, sorry. Just a minute.
Yeah, Abrikesh.
Sir, I had a question, but this Excel file has explained the first scenario. It was
Okay,
about how
okay.
to amortize liability.
Okay.
Sir, one more question. In case of third scenario, where 1 rupees has been debited,
Yes.
suppose in exam fair value has been given and mentioned that the registration charges are not given. In that case, we have to book it at the fair value only.
So basically in exam, Abrikesh, you need to write that in case of intangible asset acquired by way of a government grant, we have two options, right? Option number one, to recognize intangible asset and government grant both at fair value, right? So in this question,
Yes.
the fair value is given and hence intangible asset can be recognized at fair value. For example, the fair value is 2 lakh rupees. So you need to write the accounting entry intangible asset account debit 2 lakh rupees to deferred government grant liability or government grant
Okay.
liability. You can use any nomenclature, right? But it has to be very clear that the nomenclature which you are using, it is like a liability. Okay. So use
Yes,
deferred government grant, use government grant liability. Okay. So
Yes,
this is how you can do.
Yes, thank you, sir.
And you can also write there is another option of recognizing intangible asset and nominal amount plus expenditure if any. Okay. So you can write that is also an option.
Okay, sir.
Okay. So friends, now let's go to the next mode. So intangible asset, internally generated goodwill. Friends, tell me whether internally generated goodwill can be capitalized. Internally generated goodwill. Is it separable? Market share, goodwill, is it separable from the business? I'm saying that if few students have appreciated me and I'm saying that I have a lot of goodwill, can I go and capitalize that goodwill in my books of accounts? I have paid nothing. Yeah? अगर ऐसा होगा, so every year, if a company is getting weak, the company will recognize goodwill in their books of accounts to just bloat in their balance sheet, to make their balance sheet healthy in terms of numbers. Correct? So friends, Ind AS 38 specifically says that internally generated goodwill cannot be capitalized and the recognition is prohibited under Ind AS 38. Internally generated goodwill cannot be capitalized, The recognition is prohibited in Ind AS 38. So in examination, if the question will lucrate you that, my dear students, the company has a legacy of 60-70 years and it's a very highly valuable company, right? So they have a lot of sales, etc. So the question will trap you, right? कि कंपनी बहुत अच्छी है, कंपनी की लीगेसी है, कंपनी की गुडविल है, and this company wants to capitalize this goodwill in their books of accounts, right? And the value will also be given in the question, and the company engaged with a valuer and valuer has estimated the goodwill for rupees 25 lakhs as per the DCF method of valuation, right? So the question is giving you 2 paragraphs explaining about the goodwill, this, that, right? And in the last paragraph, in the 1 line, the question will ask you, calculate the value of intangible asset, calculate the value of the goodwill to be capitalized in the books of XYZ. Will you capitalize that? Answer is no. You have to write, this is an internally generated goodwill, okay? And this internally generated goodwill cannot be recognized under Ind AS 38. So this is prohibited under Ind AS 38, okay? Friends, whenever you see any balance sheet which is having goodwill, like Infosys, in Infosys, you can see the goodwill of worth rupees, if my memory is correct, so it is 7,000 crore or 5,000 crore is the number. So if you see the goodwill in the books of Infosys or some other companies, will it be internally generated goodwill? No, it is a purchased goodwill. Means it is a goodwill generated under Ind AS 103 business combinations. You remember we did the business combination concept, intangible asset acquired by way of business combination. And there, if the company has paid a purchase consideration which is over and above of the value of the net assets, fair value of the net assets, the differential will go to the goodwill, right? So it is known as a purchased goodwill. It is not known as a internally generated goodwill. Okay, is that clear? Next aspect, internally generated intangible asset. Internally generated intangible assets. Typical example, software companies, pharmaceutical companies, software companies. Friends, when COVID came, you remember the vaccine took around 3-4 months. So after COVID, this COVID was alarmed in December 2019. It reached India in February 2020. The lockdown started on 23rd March 2020. The lockdown ended in the month of, by end of May 2020. The vaccine started somewhere in June or July 2020. So July, if my memory is correct, so probably July or August 2020. Correct? So it took 7-8 months. It took 7-8 months when this COVID kicked this world. It took 7-8 months to find out a vaccine which can fight with the COVID. Friends, the question is, these pharmaceutical companies are doing a lot of research, right? To reach to the right salt, to reach to the right formula, right drugs. Okay. So let's say a company, Covishield or whatever, if that company is doing a lot of research, they are mixing a lot of chemicals, a lot of salts, a lot of compositions. They are just researching whether this will be able to fight with the COVID virus or not. Okay. So once at a day, after doing a lot of research, if they will be able to conclude, yes, this is kind of a right composition, right salt, which can fight with the COVID virus, coronavirus, probably they will be able to demonstrate that, yes, we have arrived at a right formula. And then they will get the formula patented, right? They will manufacture the medicine using that formula, or they will sold the formula to the other competitors as well. Am I right? Am I right? So friends, there are a lot of internally generated intangible assets. Internally generated intangible assets. Standard says that internally generated intangible asset has generally 2 phases. Internally generated intangible asset has 2 phases, research phase and development phase. Research phase and development phase. Research phase, development phase. Research phase and development phase. Okay. What is the research phase? Research phase is known as a acquisition of knowledge. In the research phase, you are acquiring the knowledge, acquisition of knowledge. And the development phase is known as a application of knowledge. You guys are CA final students, right? आप सब CA final students, so that is why you are there. You are here in this class. So which phase is going on? If I talk about in your career, which phase is going on right now? Research phase or development phase? Research phase is going on till the time you crack the examination. Research phase is going on, right? Whether we will be able to clear the exam, will not be able to clear the exam, don't know which kind of question will come. You are learning, you are studying, you are reading all the chapters, right? Probably the question will come from MTP, probably the question will come from RTP, probably the question will come from past examination paper, probably the question will come from ICAI study material, right? So we have to be well versed with the concepts. So you are acquiring knowledge, you are acquiring a lot of knowledge. Okay, we don't know from where the question will come, whether it is within the syllabus, out of syllabus, correct? But once you clear the exam, will you worry about from where the question will come? You know the content. Now you become a chartered accountant. You know the content. If you have to join a financial reporting team in any listed company, you know that I should be well aware about Indian accounting standard. I should know how to prepare the financial statement. I should know how to use the Excel, right? So now I become a chartered accountant. I have to join a financial reporting team and I will be able to get a salary of 10 lakh rupees, 12 lakh rupees. Okay. And I'll work there. Okay. So I have to develop on my interview skills. I have to develop on my communication skills. Okay. But the knowledge which is required for a chartered accountant, I have acquired the knowledge. I keep on developing that knowledge. I keep on grooming that knowledge. Am I right? So friends, likewise, accounting standard says that, Ind AS 38 says that if you are generating or developing some internally generated intangible assets, right? In that case, there are two phases, research phase and development phase. Research phase is a phase where it is said that it is an acquisition of knowledge, where you are acquiring knowledge. You are hitting a lot of alternatives, right? Just to find the solution. But once you achieve that solution, once you achieve that alternative, this is the right alternative which I can apply, your development phase will get started, right? Where you will be sure that, yes, I'm going into the right direction. Okay. So friend, standard says that any expenditure, any amount spent in research phase should be charged to the P&L. Amount spent in research phase shall be charged to P&L. Very important. Amount spent in development phase, ये कहाँ जाएगा? Where this will go? Development phase will be where? Asset. Very good, Nisha. It will be capitalized. Shall be capitalized. So amount spent in development phase shall be capitalized. Okay. Sir, but how do we know that development phase is started? पता कैसे चलेगा? चलिए, सीए में तो आपने बता दिया कि एग्जाम क्लियर करने के बाद पता लग जाएगा कि डेवलपमेंट फेज स्टार्ट हो गया है. We will be able to know that development phase has started. But sir, how we will be able to know that development phase is started in the normal life of a company where the company is developing some intangible assets? Friends, as per standard says that development phase will be started when 6 conditions will be satisfied. Okay. So Anu is saying when research phase is completed, development begins. So Anu, but what is the trigger? What is the date when you say that, okay, my research phase is over and my development phase started? Students, standard says that development phase is considered to be started if following condition will be met. If following conditions are met. Sir, what are those conditions? What are those conditions? Okay. Friends, there are 6 conditions, right? There are 6 conditions. And I will call this condition as a pirate. As a pirate. Just a minute. P I R A T T E. You understand pirate? Pirates of Caribbean? What is meant by pirate? What is meant by pirate?
Achia.
Yes. So development phase is considered to be started if following conditions are met. First of all, let me talk about condition. Then I'll come to the shortcut. Condition number one. Condition number one. It is probable that future economic benefit will be received. It is probable. For example, once the company has reached to the right alternative, right drug, right formula, the company said, yes, the COVID is going on. And in India, there are 130 crore population. So one medicine, one vaccine will give me a profit of, let's say, 20 rupees. And we have to give to 130 crore people, let's say 30 crore people. I have to, I have to give the medicine free of cost, but I need to charge from 100 crore people. So can you imagine, can you see, I'm sure that I will get the future economic benefit by selling this formula, by selling the medicine. Okay. It means I have reached to the right formula. So now I am probable. Now I am sure, more than 50% I'm sure that yes, I am able to use this formula to manufacture the vaccine. Okay. So probable future economic benefit is there. Future economic benefit is probable. Number 2, intention to complete, to use or sell the asset. Intention to complete, to use or sell the asset. Okay. So let me take you to this PPT first. So friends, intention to complete the intangible asset. Intention to complete the intangible asset. So do I have the intention to complete the intangible asset and to use or sell it, right? So the intention need to be checked also, whether the company is intended or company is not intended, right? For example, let's say if the pace of COVID will substantially go down automatically, we need to check whether are you still want to complete it or not. If the management will say that yes, we want to complete it and we want to use it or sell it. Okay. Okay. Number 3, the technical feasibility must be there. What is meant by technical feasibility? Means if you are manufacturing that, if you are in the process of developing that medicine or finding the formula. So when you got the right formula, you find that, if I have to manufacture in the volume, okay. So I need this raw material, I need this salt, I need this chemical from which is available in XYZ country only. And in my country, nobody will pay me more than 500 rupees for this vaccine. But this input cost me more than 500 rupees. So it is not technically feasible. It is not financially feasible, or it is not technically feasible to go with that formula, because that formula is very expensive and company is not able to foresee that they will be able to get such amount. So technical feasibility must be there. Intention to complete the intangible asset must be there. Ability to use or sell the intangible asset must be there. Ability to use or sell, right? So the company has reached to the right formula, but till the time the government has announced that no private player will be. So this COVID vaccine will not be used from any private player. Only government patented, or only COVID vaccine from the government hospitals will be available. So friends, if a private company, this company which has developed, which has reached to the right formula, whether this company will be able to use or sell the intangible asset? Answer is no, because government has denied that. The company is able to demonstrate how the intangible asset will generate future economic benefit, right? will generate the future economic benefit. Adequate technical, financial, and other resources to complete the development. Whether the company has adequate doctors, whether the company has adequate funds, whether the company has adequate resources to complete the development of intangible assets. Ability to measure the expenditure attributable to the intangible asset. Normally, it always happens. Whether the company is maintaining the proper books of accounts, the company is able to measure the expenditure attributable to the intangible asset, right? Friends, if these conditions will be satisfied, then it is said that the development phase has started. The development phase has started. I'll call this term as a pirate. Now, what is the full form of pirate? P stands for probable, 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 probable. Probable future economic benefit. Economic benefit must be there. So future economic benefit is probable. Future economic benefit is probable. Okay. I stands for, what is I? Intention. Intention to use or sell the asset. Intention to complete and use or sell the asset. Intention to complete and use oblique sell the asset. Okay. Intention. Intention will be there. R stands for what? R. What is R? Resources are adequate and available for completion of asset. Resources are adequate. Are adequate to complete the asset. So there are adequate resources, financial, technical, and other resources to complete the asset. What is A stands for? Ability. Ability. Ability to use or sell the asset. Ability है या नहीं है? Ability to use or sell the asset. If the government has banned that, no, the medicine from the private player will not be used. It means the company does not have any ability to use or sell the asset. T stands for technical feasibility must be there. Technical feasibility. It must be feasible. Technical feasibility. For example, the student has decided to pass the CA examinations. He joined CA Foundation, he cracked that. He joined CA Inter, then he went to CA Inter and he also qualified CA Inter. But when he reached to CA Final, ICAI has revised the syllabus and ICAI told that now in CA Final there will be 20 papers, there will be 20 exams. So more than 75% of the students will withdraw because they will think that it is not technically feasible, right? It is not technically feasible. Probably will be able to spend another 5 to 6 years for cracking this CA final, for preparing this 20 papers, right? So it is not technically feasible right now. Okay. So once you are saying that, okay, I am reached to the right direction and now I can develop this intangible asset, I can develop this formula, but is it technically feasible? If it is technically feasible, you can see that, yes, I have reached to the development phase. E stands for expenditure. Expenditure can be measured reliably. Friends, this future economic benefit and cost can be measured reliably. These are the two criteria which is there in every asset recognition. Okay. So friends, these are the 6 conditions. If these 6 conditions will be satisfied, then you can say that your development phase has started. Future economic benefit should be probable. Intention to complete the asset should be there. Resources are adequate to complete the asset should be there. Ability to use or sell the asset should be there. Technical feasibility must be there. Expenditure can be measured reliably. Okay. Now we will discuss with the help of an example. A Limited has started doing a research for a medicine on 1st April 2019. The company has spent 50 lakh till 31st May 2021. On 1st June 2021, the company has met all the criteria for development and spent rupees 30 lakh more till 31st March 2022. Explain what will be the treatment of the above rupees 80 lakhs. Tell me, iska kya hoga? 80 लाख का ट्रीटमेंट क्या होगा?
80 lakhs to P&L and 30 lakhs to be capitalized.
Okay. So first of all, what is the research phase? A Limited has started doing a research for a medicine on 1st April 2019. The company has spent 50 lakh till 31st May 21. On 1st June 21, the company has met all the criteria for development and spent 30 lakh more till 31st March 22. So first of all, what is my research phase? Research phase. My research phase is 1st April 2019 to 31st May 2021. This is my research phase. So what is the amount which is capital, which is charged to the P&L? 30 lakhs. 30 lakh charged to P&L. What is my development phase? Development phase. My
So 30
development
lakhs
phase
or
is,
50 lakhs?
sorry, 50 lakh, not 30 lakh, 50 lakh. Development phase is 1st June. That is from 1st June. From 1st June. Your development phase has started. This is 30 lakh. 30 lakh will also charge to capitalize. It has to be capitalized. It will form part of your asset. It has to be capitalized. Okay. Perfect. Perfect. Sir, whether in the exam, these 6 conditions will be asked, you guys should be aware about this, right? At least these are the 6 conditions. You need to read pirate. You need to learn pirate. Okay. Perfect. So, sir, there is one more important part here. Sir, let's say this is a very subjective thing, right? Let's say, for example, the company is not able to distinguish between the research phase and development phase, right? The company is not able to distinguish between the research phase and development phase. Then what to do? Okay. At times, the company is not able to clearly demonstrate, yes, my development phase started. Okay. And the company has a visibility also. For example, the student has appeared in the CA final examination. There are 6 papers. He got the exemption in 5 papers, but he was not able to clear 1 paper, let's say. And he is very much sure in the next exam, I will clear 1 paper, right? But till the time he will not clear all the 6 papers, he will not be qualified as a chartered accountant. He will not be called as a chartered accountant, right? So he is confused that whether my research phase is going on or my development phase has started. And he is close to 100% sure only 1 paper is left. I will be able to clear this 1 paper, right? So friends, standard says that if the company is not able to distinguish between the research phase and development phase, right? Note. If a company is not able to identify between the research phase and development phase, then treat it as a research phase. Give the benefit of doubt to the research phase and charge the expenditure to the P&L Okay. Important aspect. Note second aspect. See, this research and development is very subjective, right? This research is going on for the ages. So a company was in the process of developing a formula for a particular disease, okay, since last 6-7 years. So when the company reached to the current year, the company has found that the development phase has already started since last year, right? Let's say A Limited is developing a formula since, developing means researching a formula since 2019, right? The company has the company has made 10 lakh rupees expenditure every year. In 2024, the company has found that the development phase was started in 2023 itself, but till last year the company has closed, the company has treat that expenditure as a research phase expenditure and charge the expense to P&L. Suggest the correct treatment. Tell me the correct treatment. क्या करना चाहिए? Any students? Any student who can guide what to do?
For current year, it needs to be reversed. 10 lakhs. So intangible asset debit to P&L.
Friends, standard says that the expenditure charged on a research phase shall not be reversed in future period. Right? If you have recognized some expenses considering it was a research phase expenditure, right? And now you have determined that, oh, my development phase was started in the last year itself. You cannot reverse the last year expenditure. You cannot reverse the expenditure recognized in the P&L. You cannot reverse in the future years, right? This is which is written in the standard. Okay. Is that clear? Is that clear, my dear friends? So these are the important aspects from the examination perspective, from the understanding perspective. Okay. Right. So this standard prohibits reinstatement of expenditure previously recognized as an expense. Okay. So friends, now let me take you. So this part of this question we have covered. Let me take you to the question number. So let me take you directly to the ICAI study material, and there we will do one question. Illustration number 7. I hope this ICAI study material is visible. Is that visible? Illustration number 7.
Yes.
Venus Limited is preparing its accounts for the year ended 31st March 2002 and is unsure about how to treat the following items. Company has completed a big marketing and advertising campaign costing rupees 2,40,000. The finance director had authorized this campaign on the basis that it would create 5 lakh of additional profit over the next 3 years. Right? Students, whenever you are reading the question, right, the alarm should start ringing in your mind. When I was reading the first line, company has completed a big marketing and advertising campaign. You know, what was there in my mind when I was reading this line? Oh, this is advertising and marketing campaign. So this will not meet the definition of intangible asset, correct? Marketing का खर्चा, advertisement का खर्चा तो आप asset नहीं बनाते ना उसको, या बनाते हो? बनाते हो?
No, sir.
No. So this marketing and advertisement expenses has to be charged as an expense, correct? Because you cannot say that I cannot say that I have spent 100 crores in IPL. Tata has funded IPL, right? I still remember. So there was a company called Arise. Arise was in the manufacturing of geysers, heater, boilers. So they have sponsored Asia Cup in 2004, not in 2004, 2012. So Arise Asia Cup. After sponsoring that Asia Cup, the company becomes bankrupt. And they have spent around 500 crores in sponsoring the Asia Cup. So that is for the brand promotion, advertisement, right? So the company has completed this big marketing and advertising campaign costing rupees 2,40,000. The finance director had authorized this campaign on the basis that future economic benefit will be there and the company will be able to get 5 lakh rupees of additional profit. So what is the treatment of this 2,40,000? Tell me. What is the treatment
Charge to P&L, sir.
of 2,40,000? It has to charge to the P&L as an expense. Yes, charge to P&L. Second, a new product was developed during the year. New product means something which is talking about internally generated intangible asset. The expenditure aggregated rupees 1,50,000, out of which 1 lakh was incurred prior to 30th September 2001, the date on which it became clear that the product was technically viable. What does it mean? The total expenditure was 150 and 1 lakh was prior to 1st October 2001, that is up to 30th September 2001, and on 1st October it was clear that the product become technically viable. The new product will be launched in the next 4 months and its recoverable amount is estimated at 70,000 rupees. So 150 में से 1 lakh कौन से फेज का है? रिसर्च फेज का है या डेवलपमेंट फेज का खर्चा है?
Research phase, sir.
Research phase. Where it will go? Where it will go? Yeah. So research phase 1 lakh will go to P&L. And what about 50,000?
Capitalize.
50,000 has to be capitalized as a intangible asset under development. आपको पता है ना पीपीई में भी वर्क इन प्रोग्रेस होता है ना? Have you seen CWIP? Capital work in progress in the balance sheets?
Yes, sir.
So likewise, intangible asset also have a CWIP, which is known as an intangible asset under development. Okay. Okay. So second question is clear. Second part is clear. Part number 3, staff participated in a training program which cost the company rupees 3 lakh. Right? Training cost 3 lakh rupees. कुछ अलार्म बज रहा है आपके माइंड में? ट्रेनिंग कॉस्ट?
Yes.
What kind of alarm? क्या होना चाहिए ट्रेनिंग कॉस्ट का?
It can't be intangible asset.
It can't be capitalized. It can't be intangible asset. Training cost is an expense. It has to go to the P&L. चलो पढ़ लेते हैं पूरा. Let's read the entire third part. So staff training 3 lakh rupees. The training organization had made a presentation to the director of Baxter outlining that incremental profit to the business over the next 12 months will be 5 lakh rupees. Again, gumrah kar raha hai question. This question is just trapping you. This question is confusing you, digressing you, right? So it doesn't matter that after training, the staff become efficient, more productivity will be there. Doesn't matter. This is a training cost. You don't have a control over the staff, right? You don't have a control to stop the future economic benefit used by the others. And it is not an intangible asset. This 3 lakh rupee has to charge to the P&L. Sanya is asking a question, sir, in question number 2, whether we need to ignore this 70,000 rupees. Sanya, this 70,000 rupees is more than 50,000 rupees. So it is given that the intangible asset under development is capitalized at 50,000 rupees. But the future economic benefit, the recoverable amount is 70,000 rupees, right? So it is more than 50,000 rupees. So it has to be ignored. But what happened? If instead of 70, it would have been 40,000, then what would happen? अगर 70,000 की जगह 40,000 होता तो क्या होता?
It is an asset, sir, not an
Sorry.
intangible. It will not be an intangible asset.
No, if it would be 40,000, Nisha, in that case, you have to check the impairment. Your intangible asset under development is 50,000 rupees, but the recoverable value is 40,000 rupees. Then what happened? So in that case, you have to charge the impairment loss of rupees 10,000. Okay. Have you forgot the concept in AS 28, impairment of asset? The carrying value of any asset, the carrying value of the asset has to be compared with the recoverable value. If recoverable value is lower than the carrying value, then you have to charge the impairment loss. Okay. So if it is less than 50,000 instead of more than 50,000, so here it is more than 50,000, no treatment will be there. But had it been less than 50,000, then impairment loss will also come into the picture, right? So students, we have covered illustration number 7 also. Illustration number 6, illustration number 7, we have covered. Okay. Let's discuss illustration number 8 quickly. Expenditure on a new production process in 2001 and 2002. Okay. 1st April to 31st December 2700. 1st January to 31st March 900, total 3600. The production process meet the intangible asset recognition criteria for development on 1st January 2002. The amount estimated to be recoverable from the process is rupees 1,000. Expenditure incurred for development of the process in financial year 2002-3 next year is 6,000. Asset was brought into use on 31st March 2003 and is expected to be useful for 6 years. What is the carrying amount of the intangible asset as at 31st March 2002, 31st March 2003? Also determine the charge to P&L for 2001-2. As at 31st March 2004, the amount estimated to be recoverable from the process is 5,000. Determine the carrying amount of the intangible asset at 31st March 2004 and the charge to profit or loss for 2003-4 on account of impairment loss. Have you understood the question? Have you understood the question?
Yes.
Lot of years are there, lot of data is there, right? I am totally confused. So let me read this question again. Okay. Expenditure on new production process in 2001-2 means the entire story starts from the year 2001-2. 1st April to 31st December is given and 1st January to 31st March is also given. Okay. The total cost is 3,600 in first year 1-2. The production process met the intangible asset recognition criteria for development on 1st January. So what is the treatment of this 2,700 in 2001-2?
Expense out.
Expense out. Why?
Research phase.
It is a research phase expense. Vignesh, are you aligned with me? Are you clear about 2,700? 1st April to 31st December, it has to be expensed out. What about 900? In 2001-2, what about 900? This met the intangible asset recognition criteria on 1st January. So it means development phase has started, capitalized. Very good. So in 31st March 2002 balance sheet, 2,700 will go to the P&L and 900 will go to the intangible asset under development asset. Okay. And on 31st March 2002, the recoverable value of this intangible asset under development is 1,000. Do we need to do anything for this 1,000? Answer is no. But अगर 800 होता तो क्या करते? If this would have been 800, what we would have been doing here? क्या करते?
Difference impairment loss.
Difference is impairment loss करते. Very good. Difference is impairment loss करते. So अब ये first paragraph तक things are clear. So have we concluded till 31st March 2002? What is the carrying value of intangible asset under development on 31st March 2002? 900. Right? 900. And if it is intangible asset under development, will you amortize? Will you amortize this intangible asset under development? आप CWIP को depreciate करते हो? आप सिविप को डेप्रिशिएट करते हो? नहीं करते ना, तो इंटेंजिबल एसेट को सिविप को डेप्रिशिएट क्यों करना है? राइट? So this will not going to be amortized. Okay. So carrying value is clear. Determine the carrying value on 31st March 2002 and P&L charge. Next paragraph. Expenditure incurred for the development of the process in financial year 23 is 6,000. 6,000. So what is the treatment of this 6,000? It has to be capitalized. So now what is the total value of intangible asset under development on 31st March 2003?
900.
900 plus 6,000, 6,900. Very good. You are right, Ginny. Asset was brought into use on 31st March 2003. On 31st March 2003, the asset was brought into use. So now this intangible asset under development will be credited and intangible asset will be debited. So now we have on 31st March 2002, we have an intangible asset under development, 900. On 31st March 2003, we have an intangible asset, complete intangible asset for rupees 6,900. And we have a useful life also for 6 years. So what is the carrying value on 31st March 2004? This 6,900 has a useful life of 6 years. So this 6,900 has to be amortized over a period of 6 years. Correct? Yes or no?
Yes, sir.
So 6,900 divided by 6, what is the number?
1150.
1150. So what is the carrying value on 31st March 2004? What is the carrying value?
5,750.
5,750. 6,900 minus 1150. 5,750. And the carrying value, sorry, recoverable value is given as 5,000. The recoverable value on 31st March 2004 is given as 5,000. The carrying value is 5,750. Recoverable value is 5,000. So what is the treatment of 750?
Impairment loss.
750 will go to the impairment loss. Entry impairment loss P&L account debit to intangible assets 750. So now my carrying value on 31st March 2004 will be, what is the carrying value on
5,000.
5,000. On 31st March 2002, 900. On 31st March 2003, 6,900. On 31st March 2004, 5,000, right? So this is what it is there. This is what we have discussed. Correct? So we discussed these 3 aspects. My dear friends, I believe, I assume, and I hope you all are clear so far. Yes, Prachi, please ask your question.
Yes, sir. Sir, in the earlier, when you are explaining that whether the asset, suppose whether it is a technical feasibility is there or not, then you have said that if we are getting the loss, then what we have incurred, then it is not technically feasible.
Whatever,
Okay,
sorry, can you please repeat your question?
Okay, sir. Sir, you have told that whether if we are getting less than what we have incurred, then it is not technically feasible for the company to ask that it is a intangible asset for the recognition.
So basically, Prachi, what I have told, that is one of the example that technically it is whether technically it is feasible or not, right? So that was just one of the example. It does not mean that the company will never do that, right? So what is the example of technically feasible? I have decided that, okay, I have to go with the research of this product. Okay? Once I have concluded that, okay, now I can go into this direction. My vision is clear. I know the alternative. I know that I have to use this kind of input to produce my desired output. Okay. But I know that. So first of all, what is an intangible asset? You will use the intangible asset for the future economic benefit. You will use the intangible asset in your production processes. Okay. So when I have concluded that I will be able to use this formula for manufacturing my medicines. Okay. Salt होता है ना मेडिसिन में, एक फॉर्मूला होता है, सॉल्ट होता है, आप उससे मेडिसिन मैन्युफैक्चर करते हो, करेक्ट? बट आई नो दैट if I have to use this salt to manufacture my medicine, my input cost of what? Inventory input cost will be way beyond than my output price, which I will be able to fetch, because I know that I'm dealing into Indian market where 30-40% population is below poverty line, let's say, right? I know that I will not be able to sell this product in the market at more than 100 rupees. And I know that my input cost is 150 rupees. So I will always incur recurring losses. Okay. So should I continue with that alternative?
No, sir.
नहीं करूंगा ना मैं. So impairment is something different. Impairment अलग चीज है. Impairment क्या है? You are talking about it is technically feasible and hence you have achieved at a development stage, right? You started doing the you started recognizing the development cost as a intangible asset under development, as an asset. But reporting date pay, the recoverable amount gets lower than the carrying value due to some external factors, due to some internal factors. For example, buildings, land. जब कोविड आया था तो रियल स्टेट डेवलपर की जितनी बिल्डिंग्स और लैंड थी उनकी वैल्यू प्राइस से भी कम चली गई थी, कॉस्ट से भी कम चली गई थी, राइट? गुड़गांव में, if I talk about Gurgaon, so I still remember on 31st March 2021, when the COVID phase was going on, the flat which I was getting at rupees 60 lakhs, now that flat costing me 3 crore rupees. आज वो फ्लैट 3 करोड़ रुपए का है और 31st March 21 पे 3 साल पहले वो फ्लैट 60 लाख रुपीस का था. Why? Because due to external factor, the market value has gone down. The market value has gone down drastically. So it leads to impairment. But in future, the market has picked up, right? So जो technical feasibility है, that is different thing. The impairment is a different thing, right?
Okay, sir. Understood, sir. Thank you, sir.
Okay. But dear students, from the examination perspective, you have to just behave like horses, right? Your vision should be clear. You just need to see, okay, this is talking about first we need to capitalize or not to capitalize. We need to capitalize. Okay. Once we capitalize, it become intangible asset. Now I need to do the impairment testing also. Then you need to see, okay, what is the recoverable value? So if it is given in the question, compare your carrying value with the recoverable value. If your carrying value is higher than the recoverable value, impair. If it is not, don't impair. Correct? So friends, we have covered this this part of intangible asset, which is intangible asset recognition, intangible asset measurement due to different mode of acquisition, right? We have covered this 1, 2, 3, 4, 5, 6, 6 mode of acquisition. That what is the measurement of the 6 mode of acquisition. Now we will be talking about subsequent measurement. We will be talking about subsequent measurement, right? And let's have a break for 10 minutes. It's 8:24 now. Let's meet at 8:34. Okay. Thank you. Okay. So students, like in case of PPE, we discussed the concept of subsequent cost also. Major overhaul, major maintenance, major inspection, right? But these kind of concepts are not there in Ind AS 38. Why? Can anyone tell me why the concept of major maintenance, major overhaul, decommissioning liability, asset dismantling cost, why these kind of concepts are not there in Ind AS 38? Anyone who wants to explain this? Okay. So Vignesh is saying intangible asset need not require dismantling. But why? Because it does not have a physical substance. It does not have a physical existence. You're right, Ginny, right? So intangible asset does not have a physical existence and hence it does not require a major maintenance, or it does not require a dismantling or major replacement. Okay. So the kind of the nature this intangible asset is having, it does not require this kind of cost, and hence the concept of subsequent cost, the concept of dismantling is not there in intangible asset. Okay. Now coming to the subsequent measurement on the reporting date. So can anyone tell me what is the concept of subsequent measurement? What are the two models, right? Please unmute yourself. And if you guys have attended the session on Ind AS 16, tell me whatever you understand about subsequent measurement, cost model, revaluation model. Tell me any concepts. So Mamta, you can unmute and you can tell me the concept of subsequent measurement, whatever you know. Ginny,
If
do you
we
want to
add,
explain? Okay, yeah, carry on, Mamta.
if we added some additional part of assets, then if it is if it is
So Mamta, that is a subsequent cost. I am talking about subsequent measurement. So initial measurement is at transaction date, subsequent measurement is at reporting date, right? For example, the company has purchased a software on 1st January 2023. Now the company has purchased the software on 1st January 23 for rupees 10 lakh. The company will capitalize the software account debit, intangible asset to bank account 10 lakh rupees. Now on 31st March 2023, what company will do? The company will compute the carrying value of the software, correct? So how the company will compute the carrying value of the software? The company has two models. Either the company has to apply cost model or the company has to apply revaluation model, correct?
yes, sir.
Cost model or revaluation model. What is the cost model? Means
Total
the
cost
asset
incurred.
has to be carried at cost.
Total cost incurred.
Asset has to be carried at cost minus. Yes, whatever is the cost incurred, the gross block of the asset is always the cost minus accumulated depreciation. For example, the life of the software, 10 lakh divided by 5. What is the per annum amortization? 10 lakh divided by 5. 2 lakh. Am I audible? Am I audible to everyone?
Yes, sir. No audible.
Okay. So 10 lakh divided by 5, 2 lakh rupees. Okay. So if I have opted for a cost model, under the cost model, the carrying value at the reporting date is equal to cost minus accumulated depreciation minus accumulated impairment losses. Like in the question number 8, which we have done, what we have done on 31st March 2003, the asset was capitalized at 6,90,000. Then The life was 6 years. In the next year, what we have done? We have reduced the value of amortization, right? हमने क्या किया था? हमने depreciation, हमने amortization कम कर दिया था carrying value में पहुंचने के लिए. So 6900 minus 1150, we have arrived at 5750. Then we have charged an impairment loss of 750. Then we arrive at a carrying value of 5000, right? So friends, at the time of subsequent measurement, I'm not talking about subsequent cost. There are two different aspects. You have bought an asset. You have bought an asset. So that is the transaction date. That is the initial measurement, right? Now, this asset has a life of, let's say, 5 years. So in the life of 5 years, this asset will see 31st March. Matlab, the asset will see the 5-year end closing. So at the year end closing, on the reporting date, on the balance sheet date, what is the value of this asset? This is known as a subsequent measurement. Subsequent cost क्या होती है? इसी asset पे खरीदने के बाद अगर मैंने कोई further cost incur की, that is the meaning of subsequent cost. And what is the meaning of subsequent measurement? मैंने कोई cost incur नहीं की, मैंने एक asset खरीदा और उस asset को मैंने record कर लिया. I have recorded that asset. Now, at every reporting date, how will I arrive at a carrying value of this asset? So there are two methods of arriving at a carrying value, either cost model or revaluation model. Matlab, either you have to apply the cost approach or you have to apply the revaluation approach, means fair value approach. I hope you guys have heard about cost model or revaluation model. Is there anyone in the class who have not heard about cost model or revaluation model? It was there in accounting standard 10. We have also studied this cost model revaluation model in India 16 just last week. Anyone who has not heard about cost model revaluation model? Please write on the chat box. On the portal, people are saying, yes, sir, we are aware about the cost model and revaluation model. Okay. So, friends, let me explain you. Okay. And I hope the Excel file is visible. So let's talk about the subsequent measurement. Let's talk about the subsequent measurement. Subsequent measurement. Let's talk about subsequent measurement. Student, are you able to hear my voice properly? Because 2 students are complaining about the voice issue. अशोक जी, मेरी वॉइस सही आ रही है? ओके, बहुत ज्यादा हो रही है क्या? ओके ओके, सो मैं थोड़ा नेटवर्क एरिया में चला जाता हूँ और ज्यादा. यस, अभी प्रॉब्लम नहीं आएगी. So let's talk about subsequent measurement, right? And friends, here we are just revising the concept of Ind AS 16. The 100% revision of Ind AS 16, what we have covered earlier, okay? So friends, intangible asset can be measured subsequently either using cost model or using revaluation model. Okay? Cost model or revaluation model. What is meant by cost model? What is meant by revaluation model? We'll discuss that. But before that, let's discuss some concepts. So there are 2 models, cost model, revaluation model. Whatever model the company will apply, either cost model or revaluation model, it should apply consistently to that class of asset. It should apply consistently to that class of asset. What is meant by class of asset? Can anyone tell me what is meant by class of asset? Nisha, what is meant by class of asset?
Similar assets grouped together.
Sorry?
Similar assets grouped together.
Okay. So class of asset means the asset which can group together. Means the assets which are having a same nature and use in an entity. Copyright, trademark, formula, goodwill, intellectual property rights. So these are the which are of a similar nature and use in an entity's operations, right? So class of asset means grouping of asset having a same nature, similar nature and use in an entity operation. The classic example is if you have audited any company, right, or any large company, you will find a lot of softwares, Tally software, SAP, ERP, some other softwares, right, which is helping in maintaining the books of accounts, which is helpful in maintaining the MIS. So lot many softwares are there. Okay, friends. So all the softwares have a similar nature and use in an entity's operation, maintaining the data, MIS, books of accounts. Okay. So all these different software have been clubbed in the class of software. Okay. So class of asset means grouping of similar asset having same nature and use in an entity's operation. You remember in PP we have talked about the class of asset and factory building is a separate class of asset. These are the some examples of the class of asset: software, patent, copyright, trademark, formula, goodwill, IPR, etc., etc. Okay, right? So, student, just a minute. Is it better now? Students, is it better now? Okay. Right. So there are two model, cost model or revaluation model. Whatever model the company will apply, it has to be applied consistently to that class of asset. Okay. And class of asset means grouping of similar asset having same nature and use in an entity operation. Whether software and license, whether these are same class of asset. There are two different class of asset. Software is a different class and license is a different class. Okay. Okay. So let's understood with the help of an example. So there is a software A, B, and C. There is a software A, B, and C. The company wants to apply revaluation model to software A, and the company wants to apply cost model to software B and C. So whether this treatment is correct, whether this
No,
treatment is
sir.
correct. Why?
Because it is same class of assets, it should follow the same valuation method.
Yes, you're right. It is the same class of asset, and for a particular class of asset, the company has to apply the same model for all the asset in that particular class. Okay, so it is not correct. It is not correct. Why? It need to apply same model for all three software. Answer. It is not correct. It need to apply same model for all three class of asset. For all three class of asset. Okay. Second example. The company is applying revaluation model for software A and B, and the company is applying cost model for software C. Why? Because the active market is not there and the company is not able to determine the fair value of software C. Tell me whether this treatment is correct.
No, sir.
This is a different concept in Ind AS 38. Friends, intangible asset being different from tangible asset, right? Intangible. The standard says that, let's say you have three different software, you have three different intangible asset, but the class is same. You are able to identify the fair value and you have opted for revaluation model, okay? And you are able to find out the fair value for all the asset in the particular class except a single asset, okay? Why? Because the active market does not exist and you cannot determine the fair value of that asset, that software. So in that case, it is allowed to carry that software. It is allowed to carry that intangible asset at different model, right? Answer, correct. The company has to apply the same model for all the assets in a single class. However, if any asset's fair value cannot be determined, in that case, that asset can be carried at a cost model. So in this case, it is correct. It is correct. Okay. Understood? So this is what which is written in the standard for the intangible asset, Friends, I hope it is clear to all of you. I hope it is clear to all of you. Any challenge? Any challenge? Yeah. Okay. So what is a cost model? What is a revaluation model? While I have already covered in Index 16, so let me cover again in Index 38. Cost model, revaluation model, same. I will cover here also revaluation model, cost model. So this cost model is based on, it is based on cost at the time of transaction. At the time of transaction means historical cost. This model is based on the fair value. This model is based on fair value. Fair value. Okay. So in cost model, the carrying amount will be calculated by cost minus accumulated depreciation और amortization. बात तो एक ही है, नाम अलग है. Accumulated amortization minus accumulated impairment losses, minus accumulated impairment losses. Here, the meaning of carrying amount is not cost. It is fair value. It is revalued amount. Revalued amount minus subsequent accumulated depreciation minus subsequent accumulated impairment losses, minus subsequent accumulated impairment losses. Have you understood the meaning of carrying value on the reporting date, on the balance sheet date, in cost model and revaluation model? Have you understood? Understood or not? Right. Let's say A Limited has purchased a software for ₹1 lakh. The life of the software is assumed to be 4 years. Calculate carrying value at the end of every year. What is my cost? What is my cost? My cost is 1 lakh. Less amortization. What is my amortization? What is my remaining life? 4 years. What is my amortization? This divided by 4. Okay. This divided by 4. 25,000. What is the carrying value at the end of the first year? What is the carrying value at the end of the first year?
75,000.
Value at the end of first year. 75,000. Okay. Now, what is the remaining life? At the end of the first year, what is the remaining life? Balance life. 3 years. Amortization. Again, 75,000 divided by the balance life. What is the carrying value at the end of the second year? Carrying value at the end of second year is
50,000.
50,000. So what is my remaining life? 2 years. Less amortization. Carrying value at the end of third year is 25,000. Third year. What is the remaining life at the end of third year? 1 year. So amortization. This divided by balance life 1 year. So what is my carrying value at the end of the fourth year? Carrying value at the end of fourth year? How much?
0.
0. So this is how, carrying value has to be computed by using the cost model. With the same example, what will happen if this question will say that, let me make it complex little. A Limited has purchased a software for rupees 1 lakh. Life of software is assumed to be 4 years. Calculate carrying value at the end of every year. Assuming the recoverable value at the end of second year is 40,000. Okay. So what is the cost in this case? What is the cost? The cost is 1 lakh. What is my first year amortization? 25,000. My carrying value at the end of first year, 25,000. What is my carrying value at the end of second year? My carrying value at the end of second year will be how much? 50,000. Am I right?
40,000. 40,000, sir.
40,000 less impairment loss. So this will be my carrying value at the end of second year. What is my impairment loss? 10,000. You understand how this 10,000 is arrived? 10,000. Because recoverable value is given, na? So my carrying value at the end of second year will become 40,000. What is the remaining life? 2 years. Now, what is the amortization for third year?
20,000.
40,000 is the closing balance at the end of second year or opening balance at the beginning of the third year, divide by the remaining life. Okay. So this is my carrying value at the end of third year. So now what is my amortization in the fourth year? My remaining life is how much? 1 year. So this divided by 1. What is my carrying value at the end of fourth year? 0. So we understood the cost model, cost minus accumulated depreciation minus accumulated impairment losses, right? We understood that. And we have also understood that this amortization, depreciation has to be charged on the carrying value over the remaining useful life. It is prospective. Can you see? Ginny, Mamta, Abrikesh, Rahul, Rajat, Khushi, can you see? So in the first 2 year depreciation amortization was 25,000. But in third and fourth year, it became 20,000. Correct? Because the carrying value has changed. So that is why whatever is the carrying value, the depreciation or amortization has to be made on the basis of remaining useful life. जो भी आपकी वैल्यू आ रही है उसको डिस्ट्रीब्यूट करना है, उसको डिवाइड करना है, उसको डेप्रिसिएट करना है, अमोर्टाइज करना है ओवर द रिमेनिंग यूजफुल लाइफ. करेक्ट? And what about this revaluation approach? My dear friends? ये revaluation approach में कैसे करेंगे? जो भी revalued amount आएगा उसको करना है हमें. So let me take you with the example of revaluation approach also. So carrying value is revalued amount minus subsequent accumulated depreciation minus subsequent accumulated amortization. Now let's go to the revaluation approach. Okay. For example, A Limited has purchased a software for rupees 1 lakh. The life of the software is assumed to be 4 years. Same. The company has revalued the software at the end of second year. The fair value comes out to be rupees 1.10 lakhs. So let me take you again with this part. What is the cost? What is the cost? 1 lakh. What is the depreciation in the first year? Amortization in the first year. What is the carrying value at the end of the first year? This one. What is the amortization in the second year? This divided by 3. And what is the value? What is the carrying value at the end of the second year? It is 50,000. But in this question, it is written that the company has to revalue the software at the end of second year. The fair value comes out to rupees 1.10 lakh and the company has opted for the revaluation model. क्या करें? What to do in this case? If the company has to opt for the revaluation model, this will become your carrying value. So what is the fair value? Fair value
1,10,000.
or oblique revalued amount. Revalued amount. It is 1,10,000. This will become your carrying value. What is the remaining life?
2 years.
What is the remaining life at the end of the second year? So your carrying value at the end of second year will become the revalued amount and the life is 2 years. So now let's go to the next part. Amortization. How much is the amortization? This divided by the balance life. Carrying value at the end of the third year. Okay. Then your remaining life is 1 year. Your amortization is 55,000 divided by 1. This is what you have to do. Right? Sorry. Less amortization, 55,000, and your carrying value at the end of fourth year will be 0. I believe this part is clear to all of you. Let me know if you have any question, if you have any challenge, right? This is 100% complete revision of Ind AS 16 PPE.
Sir, at the end of second year, balance 60,000 will go to revaluation reserve.
At the end of
When we
second,
have
yes,
second
yes,
year.
yes,
Okay.
it will go to revaluation reserve, right?
Okay.
Now, friends, let's talk about, sir, if you have opted for revaluation model, right? And there is a revaluation surplus. Sir, what is the treatment of that? What is the treatment of that? Same treatment, what we have discussed in Ind AS 16, right? Revaluation impact, accounting treatment of gains and losses on revaluation. So let me give you one example here. Revaluation impact, accounting treatment of gains and losses on revaluation. Example, following details are given for a mining rights license. Acquisition date is 1st April 2018. Fair value on 31st March 2019, 2021 is given. Case number 1, case number 2. First talk about case number 1. What is the acquisition date? 1st April 18. What is the amount? 10,000. Cost is 10,000. On 31st March 2019, the fair value become 12,000. So what is this? Upside, downside? Increase in the value or decrease in the value? Increase in the value. Upside. Okay. What is the treatment of this upside? What is the treatment of this upside?
Revaluation reserve.
Revaluation reserve. So first of all, let's talk about case 1. Okay. Let's talk about case 1. So we will talk about what is my intangible asset value, what is my revaluation surplus value. What is my first entry on 31st March, on 1st April 2018? What is the entry on 1st April 18?
Asset to
1st
bank.
April 18. intangible asset to bank, right? Intangible asset to bank. Intangible asset to bank. What is the value?
10,000.
10,000 is the value. Debit, credit. Okay. Any amount in revaluation surplus?
No, sir.
Zero. On the day one, it is zero. Now, let's do the third entry. 31st March 2019. What is the accounting entry on 31st March 2019? The value has gone up by 2,000. Value बढ़ गई, क्या entry करूं?
Asset account debit to revaluation reserve.
Sir,
Very good.
amortization, sir.
Very good. So
No
as of
information.
now, just forget about amortization. Why? Because this is a revaluation model, and every year this revaluation is there, right? And the useful life is also not given. But to answer your question, yes, we have to do amortization. So amortization करने के बाद the value has gone down, but the value is higher than the original cost. So again, the catch up will go to the revaluation reserve. Okay. But for the sake of just explaining the concept of the revaluation surplus, so as of now, we are not talking about amortization. Okay? Is that right, Nisha?
Okay, sir.
Yeah.
Anila.
Anila, okay. So intangible asset debit to revaluation surplus credit. What is the amount? 12,000 minus 10,000. Actually, what happens when every year you are doing the revaluation, your revalued amount, your fair value will replace the original cost. So every time your fair value will become the new cost. Correct? So what is the value of my revaluation surplus at the end of the first year? 2,000 is my revaluation surplus. Let's go to 31st March 2020. Now what happened? Again, this 12,000 become 15,000. Again, same entry. This time the value is 15,000 minus 12,000. What is the balance in the revaluation surplus? This plus 3,000. Correct? 31st March 21. What is the accounting entry 31st March 21? Now this 15,000 become 9,000. The value has gone down by 6,000. The value has gone down by 6,000.
Revaluation surplus debit 5,000, P&L 1,000, and intangible asset 6,000 credit.
Whatever revaluation surplus is there, we need to debit that revaluation surplus. By how much? Of course, this revaluation surplus will reversed. 2. Of course, we need to credit asset. By what value? 15,000 minus 9,000. 15 minus 9. Where the additional 1,000 will go?
P&L.
Loss on revaluation. Impairment loss. Revaluation. Debit. P&L. 1,000. Right? This will go to P&L. Okay. Go to P&L. And where the revaluation surplus will go? It will go to OCI, other comprehensive income. Okay. And what is the balance in your revaluation surplus account? This minus this, 0. Let's talk about case 2. Let's talk about case 2. Okay. Case 2. Yes, what is the values in the case 2? These are the values which are given. 31st March. So let me write here. These are the values which are given. 1st April 18. What is the accounting entry on 1st April 18? Same accounting entry. Intangible asset account debit to bank. Correct? Accounting entry, intangible asset debit to bank, 10,000, 10,000. Okay, what is the next entry on 31st March 2019? What is the next entry? This 10,000 become 9,000. So we are discussing a
Revaluation.
different case. So now at the first time after acquisition, the value has gone down.
P&L account, sir.
P&L account. Okay, impairment loss debit. I'm ignoring the concept of amortization right now. I'm just explaining the concept. What happens if the value has gone down? Debit. Credit what? Credit what? To intangible asset. To intangible asset. $10,000 minus 9,000. What is the value in revaluation surplus? Nothing. Zero. And what is the amount in impairment loss? What is the amount in impairment loss which we have debited in the P&L? What is the amount of impairment loss which we have debited in the P&L? 1,000. It is not a balance sheet number. It is a P&L number. I'm just writing that how much I have debited. Okay. What happened on 31st March 20? Again, this 9,000 become 8,000. What is the accounting entry? Again, P&L debit, impairment loss debit to intangible asset. Value, the value is 9 minus 8, 1,000. What is the revaluation surplus? 0. What is my impairment loss? What is the total impairment loss which I have debited in P&L? The total is 2,000. On 31st March 2021, surprisingly, this 8,000 become 12,000. What to do now? Now you have to debit your intangible asset. The value has gone up. You have to debit your intangible asset. But by which amount? 12 minus 8. You have to debit your intangible asset by 4,000. But what we need to credit?
Revaluation reserve to the extent of 2,000.
P&L.
So we need to credit P&L. Whatever P&L we have debited, whatever impairment loss we have debited, first of all, we will credit that impairment loss. So what is the amount of this impairment loss which we have debited?
2,000.
2,000. We will reverse this number. Okay. And the balance, where the balance will go?
Revaluation.
Balance will go to the revaluation surplus. Revaluation surplus. Okay. Credit. 4,000 minus 2,000. Sorry, 4 minus 2, 2,000. I hope this is clear to everyone. What is my revaluation surplus balance? My revaluation surplus balance is this plus this. What is my impairment loss balance? Now nothing is left. Whatever we have debited is credited, right? I hope with this example, everything is clear about cost model, revaluation model, treatment of revaluation surplus. So whenever there is an increase, revaluation surplus needs to be credited. Subsequently, if there is a decrease, so you need to reverse your impairment, you need to reverse your revaluation surplus to the extent it is available. If the decrease is beyond the surplus, the remaining decrease has to be debited to the P&L. If first time it is a decrease, it has to be debited to the P&L. Subsequently, if there is an increase, so first you need to reverse your decrease. First you need to reverse whatever you are debited in the P&L, you need to reverse that, right? If there is a further increase, then for the further increase, you can take it to the revaluation surplus in OCI. Okay. Yes, Ginny, your answers are also reaching to me. Okay, friends. Is that clear? So utilization of revaluation surplus. Friends, you remember we discussed this utilization of revaluation surplus concept also. Utilization of revaluation surplus. So how to use this revaluation surplus? Can anyone tell me how this revaluation surplus can be used? The revaluation surplus can be used either at the end of the life of the asset or during the lifetime. At the time of disposal or derecognition of asset. At the time of disposal of the derecognition of the asset. Friends, whatever revaluation surplus is sitting in the balance sheet, in the reserves. So let's say a company has done the revaluation of a software. There is a revaluation surplus of 20,000. Now in the next year, the company has sold the software. So where this 20,000 will go? Where this revaluation surplus of 20,000 will go? It will be
Retained
transferred
earnings.
to retained earnings. What is the accounting entry? What is the accounting entry? Revaluation surplus account debit to retained earning. Sorry?
No, sir.
So revaluation surplus account debit to retained earning. So your revaluation surplus balance will always go to retained earning. Always. Either it is during the end of the life of the asset or during the lifetime of the asset. Okay. The accounting entry will always go to the retained earning. The same concept was there in Ind AS 16. It is just a repeat of the concept or revision of the concept. Sir, what happened if during the life of the asset, if there is a revaluation surplus which has to be used during the life of the asset, how it is going to be used? Accounting entry has to be the revaluation surplus has to be transferred to the retained earnings, but at what value? So friends, in this case, the revaluation surplus can be utilized every year to the extent of extra amortization. For example, the life of the asset is 10 years. So let's discuss with the help of an example. Life of asset is 10 year, cost is 10 lakh rupees. Cost is 1 lakh rupees. Okay. Revalued amount is 1,40,000 rupees. So what is the amortization on the basis of original cost? Amortization on the basis of original cost.
10,000.
10,000. Very good. Amortization on the basis of original cost is 10,000. 1 lakh, 1, 2, 3, 4, 5 divided by 10. What is the amortization on the basis of revalued amount? If revalued amount is 1,40,000, what is the amortization on the basis of revalued amount? It could be 1,40,000 divided by 10, 14,000. So what is extra amortization? What is excess amortization due to revaluation?
4,000.
4,000. 14 minus 10. So what standard says that whatever extra amortization is there, the revaluation surplus can be utilized every year to the extent of extra amortization. What is the accounting entry? Same. So you have to debit your P&L by 14,000, but 4,000 you can carry. 4,000 you can carry to the retained earning. You can debit from your revaluation surplus and you can credit your retained earnings, right? So this is what you can do. Is that clear? Is that clear, my dear friends? So friends, now let me take you to the ICAI study material and discuss some questions from there. Illustration number 9. Revaluation model. Saturn Limited acquired an intangible asset on 31st March 2001 for rupees 1 lakh. The asset was revalued at 1,20,000 on 31st March 2002 and 85 on 31st March 2003. First of all, tell me, this 1 lakh become 1,20,000 in the next year. What is the treatment? Where this 20,000 will go? Where this
Revaluation
reserve, sir.
revaluation reserve. Very good. So what is the accounting entry? Asset needs to be debited. Revaluation reserve needs to be created. Next year, 120 become 85. There is a decrease of 35,000. What is the accounting entry?
Reverse the 20,000 from revaluation reserve balance to P&L.
Very good. So first of all, revaluation reserve debit 20,000. Impairment loss debit 15,000. To intangible asset 35,000. Very good. Jupiter Limited acquired an intangible asset on 31st March 2001 for rupees 1 lakh. Asset was revalued at 85,000 on 31st March 2002. So 1 lakh become 85,000 in the first year itself. What is the accounting entry?
P&L account debit.
Impairment loss P&L account debit to what? To intangible asset. In the next year, it become 1,05,000. 85 become 1,05,000. 20,000 increase. What to do? What is the accounting entry?
15,000
Whatever you
balance in impairment loss we will reverse, and balance 5,000 to revaluation reserve.
Yes. So what is the balance in the impairment loss? What we have already debited?
15,000.
15,000. 15,000. So impairment loss needs to be credited 15,000. 5,000 revaluation surplus needs to be credited, and intangible asset has to be debited by 20,000, right? So this is the accounting entry. This is the treatment which is there in the question. Okay. So let me look at the more questions. Okay. So friends, we'll discuss more illustration, but before that, let's go to the useful life concept of an intangible asset. Okay. Let's go to the useful life concept. Please confirm once my PPT is visible to everyone. This is what we have discussed. Revaluation surplus. So in case of a revaluation model, valuation need not to be performed every year or every reporting period, but it has to be, the revaluation has to be at sufficient regularity such that the carrying value does not differ materially from the fair value. Where movement in fair values are volatile and significant, frequent revaluation is required. Otherwise, 3 to 5 year revaluation is more than sufficient. Okay. This is what we have discussed already, revaluation gains and losses. Utilization of revaluation surplus we have discussed, either during the lifetime or at the end of the life of the asset. So revaluation surplus needs to be debited and retained earnings needs to be created. This question we have already covered. Friends, now coming to the useful life of the asset. So how to determine the useful life of the intangible asset? Friends, generally the useful life of the tangible asset is pretty simple, but useful life of the intangible asset is pretty difficult. Okay. For example, goodwill. The company has acquired a business and the company has paid a premium. So the difference has gone to the goodwill. Now, how to determine the life of the goodwill? Whether goodwill has a certain life? क्या उस goodwill की कोई life होगी, certain life? That goodwill does not have a certain life. So that the life of the goodwill needs to be estimated, right? Probably the company is estimating that whatever premium I am paying, I will be able to receive the future economic benefit for the next 6 years. So that is a life of the goodwill. Or probably the company is not able to determine that for how many years I will be able to enjoy the fruits for the investment which I have done in this company. I mean to say, for the premium which I have paid to acquire this company. Correct? So the question comes, sir, so it means whether the life could be finite and the life could be indefinite also. Yes, the life could be indefinite also. In case of an intangible asset, the life could be indefinite also. So what could be the useful life of intangible asset? Generally, the useful life of intangible asset is arising from contractual or other legal rights. Contractual or other legal rights, right? So the life of the intangible asset shall not exceed the period of the contractual or other legal rights. But life of intangible assets may be shorter than, depending on the period for which the entity is expecting to use the asset. I am giving you a scenario where the question may confuse you. Please write down a question. The company has purchased an intangible asset, and the company has purchased a license for rupees 1 crore. Okay. The life of the license, I mean to say the validity of the license is 10 years. The validity of the license is 10 years. The company does not expect to receive the future economic benefit from this license for more than 8 years, because the company is not expecting the market of the product from this license for more than 8 years. Determine the life of this license for the purpose of amortization.
8 years.
The validity of the license is 10 years. The contractual life is 10 years. Tell me, what is the life of the license? What is the life of the license for the purpose of amortization, and what is the amortization in the first year? Amount of amortization.
Amortizer period is 8 years and amount is 12,50,000.
What is others' view? What is others' view? Are you agree with Abrakesh or you have a different view?
10 years.
10 years, okay.
Legal life.
Students, standard says that the life of the intangible asset cannot exceed beyond contractual life, but it can be shorter than the contractual life. If the company expects that the future economic benefit will be for the lesser period, the company will be able to use the asset for the lesser period. In that case, that lesser period will be the useful life of that intangible asset, right? So in this particular case, it has to be 8 years and the amortization is 1 crore divided by 8, which is 12,50,000 every year. Okay. Correct. So this is what it is. Friends, if the useful life of an intangible asset is a finite life, means you can determine the finite life like 8 years. So in that case, and that finite life is nothing, it's a limited period of benefit to the entity. Like in this case, I'm expecting 8 years. Okay. So this is the life of the intangible asset. In that case, amortization is required. Every year you need to amortize. But for example, you have done a business combination and you have acquired a goodwill. You don't foresee the life of the goodwill. You don't predict the life of the goodwill. You're not able to predict what to do in that case. If the life is indefinite life, then what to do? If life is indefinite, then what to do?
No amortization.
Sorry?
No amortization is required.
No amortization is required because amortization needs a denominator. Your depreciable amount divided by life. Life is not there. How will you amortize? So it is an indefinite life, means no foreseeable limit to the period over which the asset is expected to generate future economic benefit. आपको नहीं पता 20 साल भी हो सकता है, 50 साल भी हो सकता है. So if amortization cannot happen, then what to do? Do I need to do something to check? Am I carrying a right value in my balance sheet? What to do? Anila, what to do here?
So just carry that on the cost.
Carry on that cost and check the impairment. Do the impairment testing. Do the impairment testing. Right? So in that case, impairment testing will be required. Amortization not required, right? You have to carry the cost and every reporting date, you have to do the impairment testing. Okay? Perfect? Perfect, my dear friends? समझ आया या नहीं आया? Is that clear or not clear? Clear or not clear?
Clear in mind, sir.
Clear in mind. Very good. So now it will be get more clearer in mind. I am taking you to the Excel file and I'll give you more complex scenario, right? I hope the Excel file is visible. Is it visible?
Yes, sir.
Useful life is driven by contractual or legal rights. It shall not exceed the contractual or legal period, but the life may be shorter than the contractual or legal period. For example, the government of India has given a mining right to X Limited for a period of 10 years. Okay. X Limited is expecting future economic benefit for a period of 5 years only and expecting to use this right for 5 years. What is the useful life in this case? The contractual life is 10 years, but the benefit which this entity is expecting from the use of the asset is only 5 years. So useful life will become 5 years. Correct? This is what we have discussed. Useful life could be finite life, could be indefinite life. So finite life means life of the asset is determined. Amortization will required. For example, cost of license is 10 lakh, life is 10 years, amortization is 1 lakh. If it is indefinite life means entity does not foresee that the future economic benefit will be available for how many years. Amortization is not possible, but mandatory impairment testing is required at least once in a year. Entity will review every year if the life is determinable. Sir, we have acquired a goodwill. First year, the life is not determinable, indefinite life. Sir, whether during the entire life, I mean to say for next 100 years, will we carry this asset always considering indefinite life? Or at every reporting date, we need to check whether now the life is determinable or not. Can I expect now? Can I estimate that for how many years the future economic benefit will be received? Standard says that yes, you are required to do that. At every reporting date, you have to review whether the useful life is determinable. You have to review whether the useful life is determinable, right? Agar useful life determinable hai, for example, after 5 years, I can estimate that I can use this goodwill only for the next 10 years. Then what to do? Then you have to
Finite
start
period.
amortization. Then you have to start amortization, correct? You have to start amortization. So let's discuss with the help of an example. Example of indefinite life. A Limited acquired a business and capitalized a goodwill for rupees 1 lakh. At this juncture, the company is not able to determine the life of the asset in which it will receive the future economic benefit. At the end of year 2, the recoverable value is 70,000. In the beginning of year 3, the company was able to identify that the remaining life is 5 years. Friends, what is the cost of the goodwill? 1 lakh. What is the amortization in first year? 0, because the life is indefinite. So amortization is not possible as the life is not determinable. What is the carrying value at the end of the first year? 1 lakh. Again, amortization in the second year 0 because the life is not determinable, but recoverable value at the end of second year is given. So what is the purpose of this recoverable value? What is the use of this recoverable value in the question?
Impairment loss.
The carrying value is 1 lakh and the recoverable value is 70,000. It means there is an impairment loss. So impairment will happen. So impairment loss will deduct. And now my carrying value at the end of year 2 becomes 70,000. In the beginning of year 3 means in the closing of year 2, the life is determinable. Now the life has been determined at 5 years. So from the third year, amortization in third year. So now the life is determined and hence asset needs to be amortized. So what is the life? 70,000 divided by 5. So 56,000 is the carrying value at the end of the third year. What is amortization in the fourth year? Amortization in the fourth year. $56,000 divided by 4. Divide by 4. Okay. So this, what is my carrying value at the end of the fourth year? My carrying value at the end of the fourth year is 56 minus 14. $42,000. Students, any question? Any question on this? Is this concept of definite life, finite life, indefinite life is clear to all of you? Is this concept clear to all of you? Yeah. Very good. Very good. So let's go to the next part. So we talked about the useful life. Now what is amortization? It is just brother of depreciation. Okay. Meaning Amortization is allocation of depreciable amount over the useful life of the asset, less any residual value. In intangible asset, will you find any residual value? In intangible asset, will you find any residual value?
No, sir.
It is without any physical substance, right? In PP, your depreciable amount is equal to cost minus residual value divided by, so cost minus residual value is the depreciable amount. Depreciation is equal to depreciable amount divided by useful life. In intangible asset, it is depreciable amount divided by useful life. Technically speaking, depreciable amount is equal to cost or revalued amount. Okay. So amortization begin when the asset is not put to use, asset is available for use. So the concept is put to use or available for use?
Available for use.
Available for use. So Abrikes is an article in a chartered accountancy firm, or let's say he works as a finance consultant. His client has purchased a Tally software on 1st April 2023, but the client has started using the Tally software on 1st July 2023. This Tally software, when it was acquired on 1st April, it got installed and this was available for use. It was put to use on 1st July. So depreciation will start. I mean to say amortization will start from when? 1st of April or 1st of July?
1st April.
April,
1st
sir.
April. Yes. In accounting books, 1st April. In income tax, the concept is put to use. Okay. Depreciation or amortization ceases. When ceases? When actually the asset is derecognized. Asset ही बेच दिया तो depreciate क्या करोगे? Or when the asset is classified as held for sale under Ind AS 105. Okay. Okay. Now, what could be the amortization method? What could be the amortization method? Amortization method कौन-कौन से हो सकते हैं? What were the depreciation method? Tell me, what was the depreciation
Straight line
method?
WDV.
SLM and WDV. और कोई method नहीं था? Ind AS 16 में मैंने
Based on usage of that asset.
based on usage on that asset, unit of production method, unit of digit method, correct? Based on the usage of that asset, correct? It could be amortization method, maybe WDV, straight line, or unit of production method, right? So what are these methods? Whether these methods are accounting policy or accounting estimate? Whether these methods are accounting policy or accounting estimates?
Estimates.
These methods are accounting estimates, right? So these methods are based on the future economic benefit, expected future economic benefit. For example, when future economic benefit is consistent, same, which method is more appropriate? When the consumption pattern is constant,
SLM.
SLM is more appropriate. When future economic benefit is decreasing trend, initial years, more future economic benefit, then it gradually it will go down. Then
WDV.
WDV. When future economic benefit is on the basis of usage, whenever you will use, you will get the future economic benefit. So unit of digit or unit of production method is the best method. So change in amortization method is considered as a change in accounting estimate and always applied prospectively. Always applied prospectively. Correct? Correct? Okay. Right? The amortization period means useful life. And amortization method, SLM, WDV, unit of production, it has to be reviewed at least at each financial year end. Okay, at each financial year end. If the life is changing, if the method is changing, you need to apply it prospectively as it is a change in accounting estimate. Okay. Friends, now let's discuss illustration number 10 of ICAI study material. Can we discuss this illustration number 10? Let's go to the illustration number 10. Any doubts so far? Whatever concepts I have covered, any doubts in the concepts? I have taken example for each and every concepts which I have discussed. Illustration number 10. X Limited engaged in the business of manufacturing fertilizers, entered into a technical collaboration agreement with a foreign company Y Limited. As a result, Y Limited would provide a technical know-how enabling X Limited to manufacture fertilizer in a more efficient way. So what is the intangible asset here? Technical know-how. X Limited paid rupees 10 crore for the use of know-how for a period of 5 years. So the cost is 10 crore, the life is 5 years, which is given. X Limited estimate the production of fertilizer as follows. So this X Limited has purchased the technical know-how, means the formula to efficient its production process, right? So tell me, if X Limited will not do any production, whether X Limited will be able to get the benefit of this formula?
No.
No. मैंने फार्मास्यूटिकल कंपनी से उसका सॉल्ट खरीद लिया कि if I will mix sodium into carbohydrate plus nitrogen, it will able to kill the malaria virus. I have paid 10 lakh rupees for that formula, but I'm not but I'm not doing any manufacturing of that medicine. Will I be able to get the future economic benefit out of that formula? Answer is no. That formula was acquired to purchase the to manufacture the medicines. So this technical know-how, this formula has been acquired for 5 years for rupees 10 crore to efficient the production system, right? So the more this company will produce, the more this company will get the future economic benefit. And X Limited estimate the production of fertilizer as follows: 1, 2, 3, 4, 5 years. These are the metric tons. Friends, by reading this question so far, which method is more appropriate if I'll ask you to amortize?
Usage based.
Unit based.
Usage based. SLM is not appropriate. Why? The consumption benefit is not constant. WDV is also not right. Why? Because it is decreasing. It is not decreasing. It is increasing. If you see the trend, and even mix in the first, second, and third year and fourth year increasing trend, then fifth year decreasing trend. So it is more of a usage based. So third method is more appropriate. Now let's read the question. At the end of the first year, it achieved its targeted production. 50,000 they have estimated when they have acquired. They have estimated that first, second, third, fourth, fifth, these are the estimated. At the end of second year, 65,000 metric ton of fertilizer was being manufactured, and X Limited considered to revise the estimate for the next 3 years. So when it reaches to first year, whatever they have estimated, it was actually produced. In the second year, they have estimated 70,000 metric ton, but they were able to produce 65,000 only. And hence they have revised the target for the next 3 years also. Okay. Okay. So the revised figures are 85, 105 and 150 metric ton for 3, 4 and 5 years respectively. So they are applying unit of production method, but they are revising the production estimates. Advise how X Limited will amortize advise how X Limited will amortize the technical know-how fees as per Ind AS 38. So we are very much clear, based on the above data, it may be suitable for X Limited to use the unit of production method, correct? To use the unit of production method, correct? Okay. The total estimated unit to be produced is how much? How much is the total unit produced?
4,50,000.
4,50,000. So let me take you to this Excel file. In this question, unit of production method of amortization will be most appropriate method. What is the initial estimate? Your initial estimate was 50, 70, 120, 110, 4,50,000. What is your actual production? 50,000, 65,000. What is your revised estimate at the end of year 2? This is the revised estimate. First year actual, second year actual, 3 year estimate, 4,20,000. What is the revised estimate at the end of year 2 for current and next 3 years? These are the revised estimates. Okay. So what is the amortization? What is the amortization? पहला amortization क्या होगा? The total cost is how much? 10 crore. So 10 crore is the total cost. Multiply by the production, multiply by the production, sorry, this multiply by production, divide by total estimated production. So this is your first year amortization. Your carrying value is 10 crore minus 1 crore 11,11,1111. Now what about the second year? What about second year, my dear friends? You have to apply it prospectively. When you reach to the second year, the second year actual production was 65 and the estimate was 85, 105, 115. So what is the total production for 4 years? 3,70,000. What is the carrying value at the end of the first year and in the beginning of the second year? 888, 888,889. So how will I depreciate? Simple. Whatever is the closing balance in the first year, this number has to be depreciated over the next 4 years. Multiply by this, divide by this. As simple as that. Correct? Correct. Now the carrying value is opening minus depreciation. This become carrying value. So what is the third year depreciation? What is the third year depreciation? What is the third year depreciation? The third year depreciation would be, what can I do? Either I can apply the total of these three. The total of these three is 3,05,000. So 85 divided by 3,05,000, I can do that. Or what I can do? Simple. 85 divided by 370. This multiply by 85 divided by 370. Okay. This multiply by 105 divided by 370. This multiply by 115 divided by 370. Right. So this is what we can do for the purpose of amortization on the basis of unit of digit method. Is that clear, my dear friends? Is that clear? Any question, any doubt here? Any question in doubt here? This is how this amortization has been happening. 85 divided by 370, 105 divided by 370. Because 370 is the total estimate for the next 4 years. And this estimate has not changed. Agar ye estimate change hota, then you have to do the revised calculation again. Okay. Okay. I hope it is good to everyone. This is what we have already covered. The concept is also covered in this case. Yes. So in the balance sheet, you can find this intangible asset under development, right? What is intangible asset under development? WIP. So friends, we have covered this part also. Intangible asset, indefinite life, we have covered that it has to be mandatory tested for impairment. Retirement and disposal. So now coming to the end of the life of intangible asset. Intangible asset has to be derecognized when it is actually sold out, when it is actually disposed of, or when future economic benefit is not expected from the use or disposal. Right? If there is any gain or loss, where that gain or loss will go? In the revenue. If there is any gain, whether it will go to revenue, answer is no, other income. If loss, other expenses. Okay. So friends, this is what we have discussed and we have concluded in Ind AS 38. We started our journey today with the revision, with the summary. And then we have covered the concept of exchange of assets. We have covered the concept of government grant, where the intangible assets are acquired by way of government grant. It has to be either recognized at fair value. In that case, intangible asset as well as deferred liability, government grant liability has to be recognized at fair value, or intangible asset has to be recognized at nominal cost plus directly attributable expenditure. Then we have discussed that internally generated goodwill is not allowed to be capitalized. Then we have discussed if there is an internally generated intangible assets like technical know-how, formula. Okay. So in these cases, you have to bifurcate the expenditure into research phase and development phase. The research phase expenditure needs to be charged to the P&L. Development phase expenditure needs to be capitalized. Okay. Then we have discussed development phase will be considered to be concluded when 6 conditions will be satisfied. Future economic benefits should be probable. Cost can be measured reliably. Ability to use or sell the asset must be there. There must be adequate resources shall be there. Technical feasibility will be there. So if these conditions will be satisfied, you can say that development phase has started, right? If you have already expensed of any expenditure considering it a research phase, you cannot reverse that expenditure in the future years. Okay, friend, if you are not able to sure that is it a research phase or a development phase, then you have to consider this as a research phase and need to P&L, charge to the P&L. Friends, then we discussed the subsequent measurement, and we discussed that in case of a subsequent measurement, the carrying value has been determined either using the cost model or revaluation model. Whatever model you should apply, you have to apply consistently for a particular class of asset, right? For example, a software is a class of asset and there are 5 software. So if you apply cost model to one software, please apply the cost model to all the 5 softwares, right? If you are applying the revaluation model, please apply revaluation model to all the software. Until and unless if a particular asset does not have an active market and fair value is not determinable, in that case, you can continue with the cost for that particular asset. Otherwise, you have to go with the revaluation surplus. Okay, friend, if there is any revaluation surplus, in that case, that revaluation surplus has to be recognized to OCI. Okay, and if there is a subsequent decrease, then revaluation surplus has to be reversed to that extent. Okay, likewise, if there is a decrease in the value of the asset, the decrease has to charge to the P&L as an impairment loss. If there is a subsequent increase, to the extent of the decrease, it has to be reversed. And if there is a further increase, it has to be charged to the revaluation surplus, OCI. Friends, this revaluation surplus has to be utilized either during the life of the asset or at the end of the life of the asset. But it will always be transferred to the retained earnings, right? If it is end of the life, then whatever revaluation surplus is there, 100% will be transferred to the revaluation surplus debit to retained earnings. If it has to be utilized during the life of the asset, then whatever is the extra amortization due to revaluation, that extra amortization shall be taken to the retained earnings, revaluation surplus to retained earnings. Then we have discussed the concept of useful life. Useful life should be a contractual or a legal life, but it can be shorter than that. So normally useful life is a life to which the company is expecting the future economic benefit by using the asset. Okay, it could be finite life, it could be indefinite life. If it is a finite life, you need to amortize. If it is indefinite life, you cannot amortize and you have to check the impairment testing, right? But every reporting date, you need to check whether my life becomes finite or not. If the life becomes finite, then whatever is the carrying value, this carrying value has to be amortized prospectively over that useful life. Okay. Then we discussed, friends, the method of amortization. There could be 3 methods: WDV, SLM, and unit of production method. And we understood the meaning of these methods. So these methods are like an estimate. So whenever you are changing your useful life, you are changing your amortization method. So this has to be like a change in accounting estimate. It has to be applied prospectively, right? And every entity needs to determine the useful life and amortization method at every reporting date. They have to review it. Okay. So this intangible asset is required to be derecognized when it is actually disposed of or when the future economic benefit is not expected. And friends, whatever gain or loss is there, it has to go to the other income or other expenses, not to the revenue. This is what we have discussed. This is the Maggie time. This is the 2-minute summary of what we have discussed in the last 3 hours. I hope you have found this session useful. We have covered so many illustrations as well, my dear friends. I hope you have found this session useful and you have been able to understand what I've explained. With the help of examples, my dear students, I would recommend you to please go through with the examples in the Excel file, because these are layman language examples and the concepts have been captured to make you guys understand the treatment and the accounting entries. Okay. So thank you so much, friends. So now I would like to conclude the session. With this session, with this Ind AS 38, my dear friends, you will be able to revise majority of the part or concept of Ind AS 16 also. So when you listen this Ind AS 16 videos and then listen Ind AS 38 videos, so probably you will find that your Ind AS 16 revision was also happened while learning Ind AS 38. Okay, because in between I have also told you that, see, this was there in Ind AS 16, but it is not there in Ind AS 38, right? So thank you so much. Thanks, Anila, for such a wonderful feedback, and Ginny for this feedback. Thank you so much. So thank you, friends. Bye-bye. Take care. Session is over, Ashok ji.